Today on the CEO Barbecue, we're looking for gold and potentially some other stuff as well up in Quebec, together with Harvest Gold. And later, I'll also be telling you about Tara Hutton, today's sponsor who makes the invisible investable. The company you're about to hear from has paid us for the production of this interview, but this interview is still intended only for experienced speculators because this is venture capital and mining is a very risky industry where failure is the norm. All conversations are general and impersonal in nature, and they contain forward-looking statements. I'm not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital is at risk, and also visit setterplus.ca where you'll find the company's official filings. If you're not 100% sure you understand all the biases and the disclaimers that I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, Harvest Gold is focused on a road-accessible land package in the Urban-Barry Greenstone Belt of the Abitibi region in Quebec, where they have 3 projects. One of them is called actually Urban-Barry, though that's not the focus. It's the Moso that's the focus, and they also have LaBelle. Again, the flagship is called Moso. It's a property that Harvest optioned from Vior, allowing them to earn 100% interest over time, with stage payments and work commitments, which of course we'll touch upon later on. The maiden drill program here was close to 5,000 meters, with some assays having come through already and showing hits such as about 2 grams of gold over 5.4 meters and 1.1 gram over 6 meters, as well as some narrower intercepts such as 2.4 grams over 1.4 meter. Though some of the historic drilling that's been re-assayed right now, or reanalyzed really right now, has come back with 3.5 grams over 14 meters and 1.4 grams over 26 meters in the Morono area, which of course I'll be asking about later on as well. Now, I'm not doing a full company overview here though, since this is not Harvest's first time on the barbecue, but if it is yours first time listening or watching, please do play that initial barbecue first, which I'll link in the description of this video, since that contained really a company overview and an introduction. So the smell test, and it dived into the background of the asset as well as management and the risks attached to the story and whatnot. And that's probably about 3 quarters ago, so probably about 9 months ago at this point. So please go and watch that first if you haven't. Just quickly though, Harvest is listed as HVG on the TSXV in Canada. With 121 million shares outstanding and a 5-cent share price today, this is a $6 million market cap company. Notably though, there are close to 75 million warrants and 60.5 million options outstanding, which of course we'll touch upon later on as well when we talk about financings. Now, I'm about to shut up already though, because Rick and Louis, we have a lot to go through here today, as you've had quite a few news releases since we last spoke, most notably assays, but your stock is actually down after going as high as almost 14 cents again, back to the 4 to 5 cent range now. So what's really going on here with the stock?
Well, thanks, Antonio, and thanks for having us back. I'm Rick Mark, the CEO of the company. Louis Martin is our 40-year veteran of the Quebec Wars on the geology side, and leading our march forward to finding some value in Moso, particularly, Antonio. So in terms of the stock price, I'll put it this way. The spring into the summer, when we were raising money, there was a lot of attention being paid to the story, really for the first time. I think the high point of the stock came on a Monday morning following an interview with Quentin Henne, who was the technical advisor for the Crescat Fund. He was talking with Rick Mills and Bob Moriarty, both of whom we've been working with. And what Quentin did was reference the Urban-Barry Belt with the splay on this side of my looking at the map, Antonio, which hosts Windfall, the $4 billion deposit, and the other deposits along what we'll call the Goldfield splay, and then our splay over here, I don't know, 60K away, Louis, something like that, maybe 80. And we own basically all of this splay and a little bit up here. And what Quentin said that morning was that he felt this was a mirror image. And if you folded the two together, and if you look at the map of the urban berry belt and these two great splays, structures coming off the big belt, you would see that that's accurate. And that was kind of a statement for the market. We never said it, but we were thrilled that Quentin did. And I think we pushed out of what was really a 10, 11 cent range up into 13, might have touched 14, and then kind of back down into that 11-cent range. And then as time went on, we took the money that we raised, very strong shareholders in that raise. It turned into about $3 million, given that the charity flow through in Canada, raising $2 million provides us with 2.4 for the ground. So we raised probably a little over $3 million in that particular raise. We spent about 2.6 million of that in the ground since we last talked, which is good for shareholders to hear. And we went about and drilled it as we thought we should in this first drill round, as you said. So the time between the excitement of the raise and the story being told for the first time, and then the long wait for results, Antonio, you'll often see stocks slump. And there's kind of these traditional patterns of junior stocks. Then our first release came out, and I think in all dreams, in all of these discovery stories, we're hoping for, as we found with VMS Ventures 20 years ago, 10 meters of 10% copper, and suddenly the whole world knew about us, literally in one news release. And we traded 500 million shares for 2 years. That was on our second hole. Now, that doesn't happen very often. And so you've described the hits we've had, which confirms that we're in gold territory. What we've learned over the last couple of news releases, as again, the stock slumps a little bit, selling begets selling. And I mentioned to you before we came on air, we did a 2.5 cent private placement, which was kind of a maintenance deal we had to do in April. And there's considerable stock came out at 2.5 cents. So I think a couple or 3 or 4 of those holders have looked at the stock coming down. And I saw all the stock coming out, and I talked to our market maker and try to identify it's a silly game in a way. You can't do anything if someone wants to sell their 2.5 cent stock at 5 cents and hold their warrant. You just can't. You kind of hope it happens at 10 or 12 or 15 or 20 in a rising market. But when they see it coming down, and then the gold turmoil of the last week or so happens, it's not surprising you would see some of this come out in volume at 5 cents. And so when you mention it, so that's where I think my own read on that is, and other shareholders, of course, on their own could do whatever they want. They can buy, they can sell, they can hold. It's tough in a market where the stock is declining. They haven't seen their high grade hit yet that they've been hoping for. And now we're kind of reshaping the story ahead of the next release, which is the central area. And those who have been following us know that this is kind of a bigger unknown area. So I expect we should get something out that this week on that. Shareholders should look for that. And we'll be talking about our first results from the central area. Mm-hmm. So that's kind of the stock story. And when you talk about us having a $6 million market cap, it kind of shocked me in a way, because as you pointed out, we had a much higher market cap, maybe as high as 10 million. And this is why it's kind of tough to value juniors on a market cap thing. But I felt like 6 million. Wow. Look at the work we've done. Look at how far we have come with this project in the last 18 or 20 months. It's quite remarkable. And I think in a future presentation, Antonio, that was building in my head this morning, actually, ahead of this call, we're going to talk about where we were when we negotiated this deal, which was closed just 2 years ago. It took 6 months to close the darn thing. And so we've only owned this option for less than 24 months. And I think we've done a heck of a job. And Louis has led a very experienced team that we call on now and then to kind of get their perspectives. And I don't think we've made many false steps geologically. I think we've raised money with strong shareholders, as good as our broad shareholder base could expect from a company this young, in part. because they like the macro story, as I mentioned, the mirror image story. They trust Louis, they trust the team, they know us from earlier investments. So I like where we are. I don't like where our stock is, but I think we're proving out that there's value here. And the purpose of this conversation, and for the audience, Antonio told me I could speak as long as I wanted on these answers. The purpose of this today is really to give you a better understanding of what we've learned, why we're excited, and how we're moving forward with more certainty and more focus, which is incredibly important when you take on, in this case in Massot, 17 kilometers of structure. Or is it 20, Louis? They can never remember on Massot.
We're up to 20 now, yeah.
Yeah, 20K of structure. And I'll point out that between Massot and LaBelle 2 years ago, Antonio, there were claims available for staking. That's not the case anymore. Now, fortunately, Vior and us have taken up. So we've brought attention to a neighborhood now. The neighborhood is hotter and our valuation is slightly lower. So it's our job now to talk to the audience and start talking about why we think it's worth more than that.
I do want to know more about that, but people listening should also want to know more about Tara Hutton, who doesn't only make the invisible investable, but they've made this video free of YouTube ads by sponsoring it. Tara Hutton is built for the people who are tired of going through boring PowerPoint decks and geological jargon when they're analyzing mining companies. It's a digital platform where the data, the story, and the context sit together so mining investors can use visuals to understand the why without needing a geology degree or a week off work. And if you're on the company side, it's a great way to present your project like a serious operator with everything investors keep asking for in one place. Contact them at terrahutton.io. Is that it though? That's what I wanted to essentially talk about. Is talking to the audience how you fix it. So how do you fix it? How do you turn the ship around here? Is it more marketing, more drilling, insider buying? What's the cure?
Well, I think it's fair to say the most important thing is to get what we have to do now is get these last two releases out about the central area and refine and connect them to this new story we're talking today about the northern area. And broadly, what we have to propose to people is what I'm talking about when I look where we were 24 months ago and chunk it in 12 months and 6 months increments and say, this is what we've accomplished to add value to this property. And the market's telling us we haven't done anything. And I think that's a fair statement to make when people look for some gauge of how do I decide whether this is a good buy or not. I think at 5 cents, this is a very good buy at a $6 million market cap, given what we've accomplished, particularly in the last 18 months. And this is from a standing start. I mean, this is like there was no momentum going into this at all. And we've generated a story that got as far as being called a mirror image of Goldfields. And I'll just remind people that Windfall sold for $4 billion. And that Goldfields owns almost the whole belt. Mm-hmm. And I'll also say this, the Northern Quebec Fund, when I talked to their analyst who invested in Harvest in the last round, he looks at companies above the 49th parallel, and half of Massot and Urban Barry is in his area, if you like. He says, Rick, I never see companies with projects this big. And that's kind of like Nevada. You go down there and you get little pieces of land because families own them or big companies own them. Look at the Urban Berry Belt. As I say, people are fighting for little claims around Massot and LaBelle now. Anything they can get in the neighborhood when we own the neighborhood now. So eventually that real estate is going to be providing value, and our job is to let the market know. Now, is that more marketing? I think the avenues of marketing we have are good. I like talking to you last year. That's why we're back. I think your audience is as sophisticated as there is, Antonio. And so the fact that we can dig into this a little bit, I think is good for us and good for your audience. And it allows us to kind of test it and work it through. And that's my job and our job eventually is to keep tweaking it so we understand what people I know they want high growth. I know they want 10 meters of 10% copper, or Louis, what would you want? 100 meters of five
Well,
grams,
or 10 meters of 10 grams too.
10 meters of 10 grams, just like copper, right? If we hit that, then our troubles are over. And it may be just one hit, but it doesn't matter. The market goes up and the money flows in. If we don't get that, what do we do? And so we'll tell the story about how we reoriented our focus on what we learned in this first drill program on Massot as the morning goes on. Morning in Vancouver, afternoon in Quebec, evening in where are you? Where are you? Brussels?
Yeah, yeah. I mean,
right on.
I mean,
In
Belgium.
Belgium.
Close to
Yeah,
Brussels.
right on.
Rick, having mentioned insider buying earlier on, though, his market is really only going to get you that way, that far, right? I mean, people want to see asset results and whatnot, and other stuff like insider buying. Is there ability and desire within management to pick up some shares once all the assets are out?
I've said this before. This is not a big hitter team. Two of my directors have taken over, and so they're both in a point in their careers. One of them should be retired, but a longtime friend of his who was running a company has gotten ill, and Len has taken over this company. I talked to him at the VRIC conference. He had 4 hours of sleep 2 nights in a row getting his marketing materials ready for VRIC, and I'm going, Jesus, Len, good for you. So and Pat Donnelly's now VP operations for an Alaska Silver company. We sat and listened to it. So those guys are buried. The other two directors, they're not wealthy guys. I can buy stock, and one of these days I'll buy stock, but it's not my prime driver. I learned 20 years ago, and it's a little different statement. I'll say this to your audience. So if I'm the bid, which means the stock price, somebody sets a bid, I learned painfully over a number of years in a number of companies that if I'm the bid, something's wrong. Now I hear you that there are a few people who watch it. One of those gentlemen I mentioned sold, I think, 200,000 shares in August, and I got a couple of hits about this, and it was a bit of a mix-up with his broker. But on the other hand, we traded like 20 million shares, and if somebody on the board, he meant to sell 50,000 shares, and I think he sold 250 or something like that with a new broker who just looked at the account and said, he didn't know Len was on the board. He said, gee, you got a lot of this one. It's really trading up. What do you think? And so I spoke to the board and I said, look, we've got people who care about insider behavior. My general feeling, Antonio, is if we create 30 million shares of buying and the board sells, I don't know, 1 million shares, good for them, good for us. That should happen. We too are allowed to make profits as we go along. That's the only insider sale we had, by the way. And I think that's a compliment to how we hold. So no, we're not a powerhouse, financially independent board. We'll take a piece of private placements. We'll build our positions slowly but surely. But the market shouldn't depend on our willingness to buy the stock to tell them that it's time for them to buy it.
Well, I do want to talk about financings and raising capital. We will later on, just for the record right now. How much money do you have right now? Not you, well, the company.
Yeah, the company has about $800,000 in the bank.
Okay. And you still have $1.5 million to spend within the option terms by the end of next year?
As I mentioned at the beginning, we'll raise more money. And I don't want to talk too much about any detail on that. You can't know pricing. You can't know anything. We've got a lot of warrants out. Are there warrant strategy we might consider? Again, we want to go back. And typically we operate in a kind of a interactive way with our biggest shareholders. What would you guys like to see? What works for you? I mean, to us, the biggest and most important thing is those strong, big shareholders say, yes, we like the new plan we're in. We want to hold our position. That's the strongest thing for the market. That's way more important than insider buying in a small company like this. Way more important. I mean, we're not Elon Musk stepping up and taking his position and letting the market know he's back in buying in X or something like that. It isn't front page news. It's more important that our biggest, smart, strong shareholders are stepping up and leading the next financing. And so I can't get into too much detail on that. I'll be clear in my mind. I would say a month from now, when we get these next news releases out, we let the story settle. And I have some discussions, and those are starting. I must say they're starting, as you can imagine, but too early to really make any specific call on it, Antonio.
Yeah. The warrants you have right now, though, 75 million of them. Who holds those? What are the terms again, if you can remind me? And
you know what? I don't have them in front of me, and they're varied depending on the financing. Broadly, I'll say that Crescat has a bunch. They've been Crescat, the Colorado fund, that has been a strong supporter of the company for 5 years now. They like the management team, they like the geological team, and they really like this story. Now we're still a long way from high grade hits that sort of explode the story on the scene. It's a busy environment now. Lots and lots and lots and lots of gold companies have been financed. They own a lot of companies, but they're smart. They'll help us. I haven't opened the conversation. One of my guys that's affiliated with Crescat, become quite close with, has assisted us in raising money. I want to talk to him about warrant strategies, because those are available as a simpler way, less expensive way to raise money.
Yeah.
So that's another. As I say, I've been on my to-do list. I've got warrant strategies. It's been there for about 3 months now. So, and when we get closer to the point where we're in the kind of conversation, Antonio, we're having now, then that actually goes onto the little tab gets written on the thing. And this week I'm going to talk to the guys about that. So, to be discussed. Too early to call.
Yeah. Well, I do want to essentially talk about where you go from here on out to drill and prove a scale and continuity, because really that's what I think the market wants. And we'll get to that. But let's maybe do a bit of a summary, if you will, of the last 6 months. And in that case, and Louis, this might be your point of talk as well, but what's the most important piece of news that you've published since we last spoke?
Well, it's probably been a progression of news going on, kind of thing. When we picked up this project originally, we had a lot we call smoke, let's say in the northern part. We had probably 60 really interesting intersections in that. So we did that compilation. We flew the airborne. And from that, we had a couple of drill targets. Our problem was we've always got too many drill targets kind of thing compared to our drilling budget. But what's really interesting from the first holes we did, we actually hit some nice, I'll call it high grade material, about 8.7 grams per ton gold, over 200 grams per ton silver, 2.2% copper, plus some zinc. So that first thing told us, hey, we're in a polymetallic, a precious metal polymetallic type system in here. So it's not just a gold only thing. So that sort of clued in, kind of think, oh, this is even nicer stuff than the high grade gold they were announcing in the past. So if we start moving in through our press releases, that was our very first one. After that, we started getting some interesting hits, always hitting something. But our last press release was probably the more interesting one. I mean, this is where we start getting these 10 meters, 19 meters wide zones kind of thing, either rich in copper or gold, or now kind of thing, a combination of both in that. So what we really like about those wide zones is a wide zone says, hey, this is something that's large and a lot more continuous than a little crack. I mean, you can get a high grade intersection, but usually those are a one of thing, just a little breakage kind of thing and some mineralization going through. But these wide zones we're getting show, hey, this thing's got some continuity. That probably means it's got depth to it. And our thing now is really just to find out when that wide zone is going to get some high grade mineralization. Where's the core of that material? And that's what we're looking at now at this point here kind of thing. So where do these big zones come out and, concentrate the gold mineralization?
And there's still 10 holes to be released, if I understand correctly, though they're not from the North Zone.
That's right. So we did the North Zone and we learned a lot from there. And that's where I'm saying we learned the high grade, the copper, gold, silver stuff. We're moving southwards and we're saying, well, it's not just narrow stuff kind of thing. We're getting broad zones. What's the next one? Now we're going to move on to the central part, and those are the assays that are going to come out. And we're going to see what we learned from the top. Can we bring it down to the central portion of it? Mm-hmm. So that's what we're going to be releasing is essentially the second half of the program, which is the central holes.
Is that going to be one news release or like all 10 together or batches? Or how do you think?
No, I think it's going to be in 2 different batches, at least at this point here.
Okay.
Because we've got some in and we're still waiting for assays to come in. I think the labs are really overworked. So that'll come in the second half. But we're ready, I think, with the first half of the holes to put out sometime this week.
Yeah, I expect that'll happen.
Yeah. Okay. From what you do know already, though, do you feel like the orogenic style thesis is still alive and dominant, though? Because you've also started inserting language in the news releases, which talks about gold-rich base metal deposits. So, yeah, well, what's changed on your target model since we last spoke?
Yeah, no, I think we're still going with the orogenic part kind of thing, but there's a lot of deposits. I mean, I could say things like Larone deposit that has, a gold and base metal rich material. There's, if you want to go up to the Shmugamu camp, those are a lot of gold copper stuff. And there are just a lot of deposits that have polymetallic, I think. And the nice thing about having those other ones, the silver, the copper, those give us additional pathfinders trying to show out where's the heat, the core of this type of deposit.
Right. Yeah.
But it's still a primarily, our primary targets is still gold mineralization. But again, with good credits, like I say, if we have over 200 grams silver, 2.2% copper, it's not negligible at that point.
Yeah. Well, and I also think after the first pass drill program, this is kind of where you tighten the strategy and the way you target and pick which of those targets actually get drilled. So talk to me about that. What exactly are you going to drill in the next program more specifically?
Yeah, so originally, like I say, they were going after those narrow high grade ones. It looks always really exciting, I guess, for investors in that. What we're going to be following now is we have these broad zones, and we've taken it from, let's say, about 60 different intersections in the northern part. We sort of fine-tuned and say, okay, we've got 15 different good showings. Now, since we've been looking at these broad envelopes, we've taken that down and said, we've got 3 of these ones in the north that are worth following up on that have wide zones of mineralization. So we're going to follow that up on the north, and we're going to take that same strategy and bring it through the central portion of the property. So we're going to start looking at broad zones of mineralization.
Yeah. Well,
Antonio, I just want to clarify this because I think in telling the story again, as I was thinking about it this morning, I literally was thinking about sort of a presentation that would show the entire 20K, however many kilometers wide it is, and what Louis is describing, it starts as a block, and then when you find your 60 target areas, you highlight an area. Now we're down to 3 discrete zones in the north, and you can see by the very nature of the evolution of this discovery process, let's call it, that you're becoming more focused, and your activity now is going to be more discrete zones, which allows, of course, the drilling to be more focused. And you have to make choices along the way. And we think that we've made pretty intelligent choices. And so part of the story of this evolution of the company and the evolution of the property itself is very much that. And I want to just tell the story that I mentioned on Wednesday. In a conversation we were having with Pascal at Vior, who's their VPX, and I'll remind the shareholder audience that Osisko Mining basically made the Windfall discovery. Some would argue they took the company over or took the project over when the discovery had already been made. But in developing the project to the point where Gold Fields bought it from them a couple of years ago, the Osisko Mining people had a choice. The management was really, they said goodbye because Gold Fields was taking it over. Many of the team, the geologists on the team, stayed and are now working for Gold Fields. But some of the management came over to Vior, and they made a deal with Vior. And now the CEO and the VPX at Vior are ex-Osisko Mining Windfall guys. So Pascal and Louis and I were talking probably a month ago as we're trying to get a feel from him. So these guys have been in the belt, Antonio, for 15 years. Pascal's a very smart geologist. Mathieu is as well, but we spend most of our time with Pascal. And I said, well, give me a little bit of an idea, the evolution of Windfall. You guys were there for a while. And he said, well, one important day, and I don't think it's out of school to tell the story. I think it's been told many times inside their room, but basically their old CEO came back into the room with the geologist and said, okay, we got to shake this up a little bit, my words. What if we looked at 0.3 gold? What if we went down to a lower level and looked at 0.3 gold with everything we know? Try that. And off they went. And according to Pascal, this opened brand new doors, new eyes saw, I call them pairs of glasses. Now the filters you're using brings things to the surface. And I think everybody can kind of understand that. So what Louis did, Louis, why don't you take that and talk about what you did then? So he goes back, and I want to introduce this way. This northern area has been drilled since the 1980s, maybe even before that, all for gold. Morono, which was the known deposit, non 43101, maybe 50, 60, 70,000 ounces in the north. We never thought it was strong enough to build a story around. It turns out those holes were drilled. They didn't even look for copper and silver. And this was 40 years ago. So, Louis, take the 0.3 gram story and apply it to what you then did with this is after we put out our first release. I think, Louis, in our timing, we put our first release out, and then we went through this little moment of the 0.3. And Louis, describe to Antonio and the audience what you did then, going back, looking at the historical work that we'd already looked at, Antonio, with a gold focus. We'd already looked at to make our decisions.
Yeah, that's it. So they were originally searching for gold, gold only. There was a little bit of, copper, silver, zinc sometimes in that. But our first, well, probably not even our first, our second or third batch, we started getting these wide intervals. You guys just look at the assay sheet and you can start seeing these, just a bit below 1 gram kind of thing that continued on. So that's when we first clued in, oh, there's these broad zones out there, even if it doesn't have the high grade in it. So we went back and looked at all the old holes there. And there were some holes that had, multi-element analysis. And SOCAM did really good work in those days. So that data was available. And then we started noticing, with some of that high grade, there are those broad zones. And we started seeing, other zones showing up with that kind of thing. And so we started getting even some 15, some 30-meter stuff up in the north near the high grade section. But again, these are broad envelopes. And again, they're going to show good strike extent. So it's going to take quite a bit of drilling to test along those horizons. But again, that gives us more targets to chase after.
Yeah. It's interesting to talk about what success might look like in that case in specific numbers, I know you just joked about it earlier, but what are we really talking about here? Are we looking for 3 grams over 20 meters, similar to historic drilling, or what are you really after in this next season?
Yeah, I think historically, mining wise, they were looking for the minimum 4.5 gram material, I think. So anything below that was, anomalous or something like that. Now at this point here, you look at when some people are doing the prices, gold has gone up a lot. So that means these open pits are going after sub 1 gram material in that. So, we're going to sort of focus on, again, broad zones, but again, we want to find the high grade section in there. So I believe you will get, these 50-meter wide zones. But within that, you will get some of these nice, I'll call them high grade. It could be, 4 grams over 20, 30 meters.
And is that enough to be economical in that part of the world?
Well, if you compare it to, some of the larger pits, the Osisko, the Detours and things like that, if they can make goes with, sub 1 grams, again, I think we need something quite a bit larger. But again, I'd go for something in between a historical 4.5 grams over, let's say, 2 meters and a broad low grade zone.
What would the low grade be like? What would that look like?
I guess we won't know until we sort of get more definition in it. And again, the question of, the volume of the gold versus the grade of the gold.
Yeah. Well, what is that? What about scale? Looking at these deposits elsewhere.
Yeah, well, scale, I think we still have lots of room. Up in the northern part kind of thing, we've had a lot of drilling. We know there's a lot of gold up there. But I think our main focus is going to be on the central portion where we only have 2-3 holes really in, one portion of it. And then we've got emptiness. Southern part, no drill holes whatsoever. Mm-hmm. So we have, probably an area of 15, 16 kilometers of wide open ground.
You're kind of answering a question that I had already. Like, does the central area remain a focus for you, or are you going to wait and see after these next couple of news releases? If you just had it completely your way, Louis, what would drilling next year look like in terms of percentage split? Like, what percentage goes toward the central versus north, and do you even go south in the first place?
Yeah, and again, I think for us, it's all a progression. We drilled the northern part. And we've got a couple of zones. Like I say, just looking at the high grade zone, the polymetallic version, we've gone from 16 showings. There's 3 we want to concentrate on, focus out there. The central zone, we've done a lot of geochemistry. That's what we're drilling now. So once we get those assays in, we're going to see, is there any continuity of that stuff? And then the southern zone, we just finished off our soil geochemistry late last year. So again, we expect to generate more targets through there. So it's going from, a lot of data known to some data to no data known.
Yeah. Yeah. And
I will add this, the story of the Morono and the second drill release is kind of interesting too. Warren Bates, I recall in our conversations, was most interested in this copper related showing 300 meters to the south of this known non-43-101 near surface gold deposit, it was always referred to as. But it was the first time we'd seen this. And so we drilled down to the south. But Louis and the team also decided to go underneath Morono. And I say this, it's important to me, people understand this. This is the first time that we saw any drilling at 300 meters. So everything that's been done, Antonio, in this place is mostly under 200 meters. Mostly. A lot of the holes were 100, 150. So really, people know nothing about this property yet. And on the deeper one is where we saw those longest intersections. So again, to the positive variation on this is the world is wide open. We have no idea what's down there. By taking this shot related to our commitment to exploring the copper showing down to the south, we ended up with a whole new set of glasses. And I say again that all of that's been drilled for the last 40, 50 years is within 200 meters of the surface. So this property is untouched. It's untouched. And yet, as I mentioned, I think it's pretty cool. There's no claims left around it. There's six, Louis, better than we. We'll get a note from our land management team saying there's 6 claims coming up, and then we hear from them, well, there's 6 bidders for these claims. Hey, Louis, I mean, It's kind of like a war going on for any property now in our area that anybody could have had for free 2 years ago. And to the audience, and I say we are in a very interesting prospective area. The best government to work with, the management team we have running. I met with Susie and went to her booth at the Vancouver conference. Of course, Louis knows these things. I didn't understand. They must have at least 23 companies they're working with all the way through Ontario and Quebec. They are veterans of this war, and they are outstanding. And Susie is an amazing woman who leads the way. And she and Louis are very close. Of course, they both speak French, and that's essential to where we are. So we are in very good hands back there. And I just think that again, I'll go back to saying where we are from where we've come from in effectively 18 months, I think is remarkable. And the fact that we're now defining discrete areas, as we've been talking about, is an achievement. It's an exploration achievement. And now we need to generate confidence in people that this continued drilling will begin to open more doors. So it's a very exciting time. Once you get on your dream goggles again, it's a very exciting time. Now, market's at 5 cents. So the most depressing moment of the day for me, Antonio, is when I open my stock watch folder and see that we're at 5 cents, and then I try to get by it. Can't do a darn thing about it. We're telling our story now, which I'm obviously doing in hopes of talking to our shareholders with you, but new shareholders that we're back at 6 million. What the heck? What we've achieved in 18 months is remarkable. The neighborhood is now filled with people knocking on the door wanting to get property near us, and we're back at a $6 million market cap. So am I saying I think it's a buy? Yes, I do. I think it's a buy. So there you go. That's kind of, I'll power back to that again. But that Louis, whatever Louis speaks to your audience, I want them to feel like we're covered. Mm-hmm. And Louis's background is extensive. His bio is on the website. He's an accomplished geo back there. and we're in very good hands with Leo or Louis running the team. And then we bring in our guys, and we've got some interesting, varied brains, minds, personalities that come in, and we don't drag them out of their real jobs very often, but every couple of months when we get together, it's pretty exciting. And so I want the audience to know that we are in extremely good hands on the geology side. In other words, our money will be very well spent.
Yeah, and I believe it's a technical story that's evolving all the time, kind of thing. You know, we learned a lot from the north. We're applying to the central portion. Now we know it's a much bigger mineralized shear zone than we thought. It continues. We're doing work to the south, so we'll even plan on extending that even further this coming summer.
Yeah. It's kind of funny with there for a second, Rick, you're thinking about Louis the Geo, which became Leo. I like that. Louis the Geo became Leo.
It was a good slip. I like that too. That was good.
Yeah. A lot of what exploration companies do, though, and Louis, this one's for you as well, is essentially sink money into the ground to disprove a thesis, right? To prove that the deposit isn't, to kill the target, if you will. How much money do you want to spend on Mousseau to kill the target? Like if I just handed you a blank.
Don't answer that, Louis. It's an open-ended question.
Yeah, hopefully none. I mean, yes, we've done it in the past, and I'll say more from a mine point of view is we do condemnation drilling to say, hey, we want to put the mill here kind of thing. I have to prove there's no gold, and sometimes you're hoping there's no gold. But in this stage, we're an early project. We want to know where the gold is. I'm less interested in where the gold. I'm less interested in not knowing where the gold is not kind of thing. For me, it's where is the gold kind of thing. And there's one horizon. The good chance there's multiple horizons.
How much money would you, like if I handed you a blank check, what's the number you're going to write on there in order to prove that you do have that then in that case?
Yeah, and again, it depends on the size of the companies. I mean, I've worked for some majors kind of thing where it's, I won't say unlimited, but pretty close to these multi-million-dollar projects every year in that. Working with juniors, you have to readjust your thoughts kind of thing. And what we did this year kind of thing, we did 5,000 meters, which was, okay, let's drill, some of the better ones right away kind of thing, and let's see where that moves us to next year so we can build another story and drill, hopefully, a double that, a 10,000 meter project and advance that to 15,000. But we're very frugal with our targets. When we're that frugal kind of thing, I try to avoid saying, well, let's do stratigraphic drilling and just blindly throw a dart trying to hit something. When we drill a target, it's got to have, does it have a good geochemistry, a geophysical, a geological reason, all for that one drill hole? And that's what I'm aiming for.
Yeah. Well, but again, I'm trying to figure out how much money you're gonna need to maybe for the next step, even not the entire thing, but thinking about, how much would you charge me if I wanted to buy a delivered discovery from you?
Louis, don't answer that question.
Well, my question is as much as Rick can give me is what I can put into the hole. And our problem is we have too many drill targets at this point. But, we went in with $1.5 million. I'd like to go in at least with another $1.5 million, if not more kind of thing for the next project. And that's being conservative junior type.
Yeah. And that's fair.
Let me answer it this way, Antonio. We've got two important ownership targets this year. And that's going to drive our thinking. And we want our shareholders to know this. $1.5 million spent in the next 24 months, which we want to spend in the next 6 to 8 months, gives us 80% period. And we're in an 80-20 joint venture with Vior. But we also want the money available to take out the last 20. And if we got that all in the first financing, if people would buy that and we could make that and that action take place, then the market would know from the moment the financing closed that money would take us to 100% ownership of Mousseau. Now, who are we? Now, as I mentioned, we're in the neighborhood, which is now really an interesting address. People are trying to get in, and Harvest Gold owns 100% of Mousseau. 20 kilometers of strike on that mirror image that Quentin talked about. We're not talking about our Urban Berry property. We're not talking about the 9 additional kilometers of that same strike we have to the south at LaBelle. We already own 100% of those. So now we're going to be 100% owners of over 50 kilometers of through-going structure or strike. Can you value that? Not yet, evidently. But again, I think, so people want to de-risk, they want to de-risk, they want to de-risk. each drill program is designed to de-risk. This has been in my view, other than the 10 meters of 10 grams or 10% copper, this has been a phenomenal showing so far. And it's tough to say that with the market cap at 6 million, the stock at 5 cents. But I hope what people are hearing and beginning to understand, the discovery process, unless you're very fortunate, takes a while. And so you want to point to accomplishments, not, as you were pointing out, well, we'll walk away from that. In our areas that we've drilled, yes, we're leaving some behind. But that's really because we've learned so much more with this new set of glasses about these discrete areas we're going to target to drill going forward. Now, Neil Richardson, my dear old pal that was with me on the discovery days in VMS, and I don't know if I'm supposed to use his name all the time, but he's a VPX for Hud Bay, and he's got a $50 million budget every year. And he says, and he always calls me Ricker back from the old days. He goes, Ricker, there's not going to be one deposit on this property. There's going to be two. There's going to be several million-ounce deposits on this property. And it's that kind of broad enthusiasm from experienced guys, Warren Bates saying, we've already got 60 showings. His line was, they haven't even gone past 25 meters off the roadways here. This property has not been explored. So there's so much to do. So you're under this pressure of trying to do it all with the budgetary questions that are rightfully asked by you, and I think appropriately answered by Louis. And what I'm trying to do is frame it in two ways. One is we're going to get as much money as is credible for the dilutive in the structure that maintains our opportunity to win in that structure with our major shareholders first is my plan. And we're going to make sure that drilling powers in on these focused, discrete areas to help us evolve and develop the story and get us to owning 100% of the property. And then at some point, you may have the property as capital. Then you'd have a different kind of a conversation for our shareholders. And so they asked me on the 6 broadcast last week, Antonio, well, what would you like a year from now? What I would like a year from now is Harvest Gold to own 100% of this, and we raise 10 million at much higher prices. And that would tell us that we've done another successful drill program. The stock is appreciated. Everybody's lining up to give us money. And that's where we want to get to, where people are lining up to get us money. And then we're not in the business of raising money every 6 or 8 months. Now we've got an opportunity to really take advantage of what we know, drill a bit deeper, chase some of these things, and begin to find out if we're touching on any of the possible deposits on the property.
Yeah. Is all the work that you want to do here, though, is that permitted? Where do you guys stand on permitting?
Louis?
Yeah, it is all permitted at this point here. So what has changed the Quebec government probably as of May last year, there's ATI permits. So this is something you request. I think you have to just talk to the First Nations, talk to the locals, the community, talk to any trappers and that. And then you apply with the government and they give you a permit good for 3 years. So we've just finished off our first year for that one. And only other permits is your wood cutting permits for your drill pads and all that. But Quebec is a very good jurisdiction for, doing your work in as far as for permitting and that.
Yeah. So there's not much in terms of permitting happening this year. There's nothing like you can just go and drill for now and then.
Well, again, we asked for where we were going to do our drilling last year. I think you started giving them a large polygon. So again, we're going to take that polygon, move it a little bit further south. Say we want to do more drilling in the south to central portion, beyond where we just drilled to the next little batch.
Sure.
They don't need specific holes. They want, sort of larger polygons. So we'll just do that and keep moving it along.
Yeah. Right. Okay. How do you finance all that work though? Just straight equity, or is it time to consider a JV of sorts, another asset level, something?
The answer to that question is much like I would say to people, what commodity do you prefer to chase? And I always answer by saying, I don't care. If the money is there and the geologists tell me we got a shot at a deposit, then the shareholders will be happy. The money generally drives it. I've been in one conversation over the past few months about a merger style conversation. I don't think it's going to work. It didn't get far enough. There were some internal barriers to it. So that would be different than a JV. But again, is it good for Harvest shareholders? Is it the best way for us to raise money? Right now, our thinking is we're going to use equity. We'll raise one more time here to get our 100% ownership in the property. We'll get as much money as we can, as we think the dilution is worth. And we'll put ourselves back in position to drill the targets. Now, we're not ready yet, Antonio. As you know, we've got a third release coming and then a fourth release coming. So at the end of that, we'll gather the whole team back again. Louis has already done a first run that we talked about in our last press release about how many targets he'd like in what's called the Trench 2 target, and then how many targets he would like in what we'll call the Morono target. Those are two discrete area. It was interesting to me that one of the secondary targets up to the very north of the property that we really hadn't thought much of with Louis' new set of glasses, he wants to poke 2 or 3 holes up there because of this interesting historic information on the gold, copper, silver halo. So we like where we are in the north. We're close to defining what we want to do with it. We haven't run that by the whole team. When we do that, when we have that already, then we go to the money. Mm-hmm. We want to make sure that they understand that it's thoughtfully done and that there's an opportunity with these drill programs that we're going to have a higher chance of success than without that kind of thoughtful detail, of course.
Mm-hmm.
Yeah. And Rick was mentioning kind of thing, more press releases coming with assays or maybe assays to come in, but we've also got more work coming in. I think we finished off a large geochem program last year on the southern part of Moso, LaBelle. So that data is still to come in also kind of thing. So that's going to generate us new targets.
Mm-hmm.
And we're not even talking about Urban Berry and LaBelle yet. Right. The way it works in my mind, Antonio, we've got 2, let's call them secondary properties. We have what I'll call minimum obligations to hold on to them. Mm-hmm. So the first responsibility we have is to hold on to them because they are assets, as I've mentioned. This is pretty good assets in a very sought after neighborhood. But typically what happens if you get a large raise, then you can afford to peel off 15% of that raise to maintain and if you can, gently develop the secondary targets. But primarily, you use your primary target to build your company and then carry on later with the secondary target. So that's something we're doing. We're very aware that that additional, I'll call it 26, 27 kilometers of strike in the Urban Berry Belt has value. And we took it all at the beginning for that very reason. For that very reason, we needed a land position to build a company around. That's what we're trying to do.
I do want an update on Urban Berry as well. We'll do that here in a second. But I've heard, just going back to how you raise capital, I've heard the name Goldfields multiple times here and there with regard to Harvest, and they're close to you and all that. But are they still an obvious partner for you? Is it too early for them? What's the connection there?
Well, we met with Goldfields last December. It was a really good meeting. They had 5 geologists. We had 5 geologists. And it was kind of fun for me to listen. I mentioned they were all Cisco guys, so they'd been in the belt for 10 years. And they kind of went quiet on us. And I've been told, secondarily, that right now they're busy with their own properties in the Urban Berry Belt. They're not as interested. I think I would prefer at this point to do it within the family if we can, to be stronger when we present ourselves, if you like, after we have 100% of the property to the world, if you like. And then we have more control over that conversation. That's not to say if the valuation isn't right, it's good for our shareholders to do it. I'll be thinking about that, Antonio, but my gut tells me now we're stronger staying with 100% ownership throughout this next stage. And then with 100% of the property, now, if you want to do that kind of a deal, I think you've got a little bit more leverage because you're not just talking about Maso or you may. You can play with a little more handily. I think the other ones are too early to have that conversation about. So for now, I don't know. We'll see. At this point, they're not high on my priority list to be contacting. Let's say that. Once we get this next story fully fleshed out, as we've been discussing, probably doesn't hurt just to stay in touch. I made a couple of contacts with their lead guy, but more just to say hello, nothing to more than that.
Yeah. Yeah. Fair enough. That's exactly what I was kind of wondering about is what is that relationship exactly? Where do you take it from here and so on and so forth?
The other side of that, really, they're busy, right? It's a South African company. Mm-hmm. This is their Canada arm now. They put some resources into this. They made a huge investment. When I had the discussion with someone in the know, if you will, last week or a couple of weeks ago now, it really was, they're still getting their feet wet. They're just getting their feet, they're grounding. They're just settling down and figuring out who they are under this new structure. And I think management is saying to them, first and foremost, tell us what we got here. And they've got a lot of property. Again, if you look at the map, they've got a lot of property. Louis, anything to add to that in terms of the Goldfields challenge with all that exploration area?
Yeah, and I think it's still a good competition. I mean, there were a couple of claims that came open between our ground and theirs. And again, we got some, they got some. So, there's still good banter going back and forth. And the other thing I think is, yeah, they're aware of us, we're aware of them kind of thing. When the claims come open, it's one of us, And the other thing is, I think all the work we're doing is adding value to our property at this point, kind of thing. Mm-hmm. So, the more work we do, the more targets, we haven't closed off anything. We haven't written any part of the property off. So again, when they do come to see us more seriously, kind of thing, I think the property is going to be worth more.
Yeah, yeah, that's fair. Well, on the topic of money, gentlemen, what are you budgeting for G&A?
Typically, we've been less than 300,000. I think probably I would say going forward, it's going to be around 300,000. So we're easily 2 years operating. Mm-hmm. We're still light, but I'll tell you what's happening. CDAR, for example, which is kind of the backbone of public companies, they've raised their prices like by 50%. I'm going, what? Like, how does that even happen? And so and we try not to use our lawyers. Antonio, I'll do anything to save money. I'll tell you that right now. What I'll say is, from the point of view of money in the bank and operating going forward, we're fully clear for 2 years, not to worry at all. And that feels good for me. That's not a worry for me. Everybody's covered, everybody's happy. And now the big objective is to get money into Louis' hands with the team's backup and go spend that smartly. And within the budget, that includes some marketing we've been talking about. I get calls on marketing every day, Antonio. We're not ready to burst into new markets yet. We need this whole next phase fulfilled. We need to have all of our results in. We need to be clear on our next drill program and why it's important. Then we can start. I mean, it's pretty cool that there's fights for claims between these properties. I mean, I really hadn't talked about that much, Louis. It's pretty cool that suddenly there's 6 people lined up for claims that nobody wanted 2 years ago. I mean, that's a statement of value that doesn't get expressed in a $6 million market cap.
Mm. How much are you looking to spend on marketing though? Did you say it is within that 300 grand?
I would say that we've spent, we did spend some money last year that was kind of one-time expenditures. The 2 ongoing contracts we have are probably 25,000 a year each. So, and then we'll do something like this, or with 6. We don't mind supporting your guys because we think you're I mean that your questioning is intelligence. Your audience is good for us. It doesn't cost us a lot of money to use you as a way to speak to the European audience.
Hmm.
A lot of guys get on planes and go to all these conferences. That can run 30, 40 grand.
Yeah.
And it's so difficult to find out whether there's any value than that, other than you have a nice weekend in Zurich or wherever the hell the conferences are held. And I just rather not do that. I've been there. I've done all that, and it just isn't as important as people feel. Well, like we're not big enough yet to touch hands again and have our next development. And we're just not big enough yet. This is too small a story still.
Yeah. Is that, are you flattering me here to try and soften up the questions, or what's going on?
Sure. But I know after the last time Louis and I got off and I said, I've forgotten this thing was called barbecue. That was brutal. So I know it's not going to work, Antonio.
Jokes aside, no, I appreciate your kind words. Thank you so much. And I appreciate the support as well, Rick. I really do. Yeah, talk to me a little bit about Urban Berry and LaBelle. Any money that you think is going to go into that, or does that depend on the type of raise that you would do? Yeah, talk to me a little bit.
Yeah, all those things. We're looking at the results. We haven't announced them, so I can't say very much about that. All I can say is there's substantial addresses at this point, with sort of LaBelle we own 100% of. Louis' idea to stake that a year and a half ago. So we have obligations to claim maintenance. And really with Urban Berry, Antonio, now it's got down to the same thing. It's obligations to claim maintenance. So it's not a great deal. So we've got something to talk about once we get our drill results out. And then we'll look at the early stage exploration, the kind of overview exploration we did last year on those two properties. But for now, I think it's incumbent on us to focus specifically, aggressively on Mousseau and getting this 100% ownership.
Well, why not?
We keep the projects sorry to interrupt, but we keep those projects in the pipeline anyways. I guess Rick was mentioning Urban Berry last fall. We did a large regional till survey kind of thing. We want to see if there's any targets out there. The LaBelle portion, again, money wise, we just focus more on the part closer to Mousseau in that. We did nice detailed soil since it works so nicely on the central part of Mousseau, and we did some prospecting. But again, there's a lot more work we can do to try to generate targets in that area.
And we have flown both of them, eh, Louis?
Yeah.
Yeah.
And with Mousseau, bottom part of Mousseau, LaBelle, we flew just last year again. So
yeah,
we keep doing the projects in the pipeline, generating the targets.
How do you look at them in terms of like maybe optioning them out or selling them, or just giving them away to get some money into the company instead of having a raise, or in support of a raise?
And again, a good question. Anything is possible. So whatever levers you have, you try to utilize. I think the Urban Berry property on the belt itself is certainly, the neighborhood is heating up. LaBelle, I think we've opened up the interest in LaBelle. I'm open to that conversation, obviously. And it's the kind of deal where, you get a junior company like Harvest Gold trying to get into Quebec, and what do? They want to take on a property. That would be kind of interesting. I may have described this to you before. We had an offer with my North American nickel company about 15 years ago. We were in Greenland, of all places, which is hot and interesting these days. We were there 20 years ago, and then we were up there drilling about 15 years ago. We had an offer from the Falconbridge Group to buy the southern quarter of a large land package in Greenland where we were chasing nickel. And the Australian fund manager, who was really part of our team, I said, look, these guys are experienced, talented guys. They're offering to buy 25% of them. They're going to set a value for our property. This is development. This is the kind of thing a junior company uses to tell the world that they're moving forward. So very similar to what you're talking about, Antonio. And he did, because the money that was backing these guys had left Falconbridge, really core, excellent nickel geologists. I mean, it was really cool that they would do that. And they didn't want to do it. The Australian fund didn't want to do it because they were backed by Chinese money. Big mistake, because anything that you can do that ascribes a value that's above It's like the takeover bid that's 40% higher than the trading value. And everybody goes, oh, that's why I was holding on to that stock, because we knew it was going to get taken out. So those opportunities you can't turn down. And it's good you brought it up, because somebody may be listening and, sends me a note tomorrow saying, we want to buy Urban Berry.
Yeah. Sure.
Do you want a finder's fee on that, Antonio?
I don't. It's all fair game. I mean, if whoever's listening is listening, I don't take finder's fees. So
no, I'm kidding. I'm kidding.
But
it's a great idea.
If you keep offering compliments, I'll keep taking them. I get paid in compliments.
No, it's a really good idea. What I like about talking with you is you're thinking ahead, and it's exactly what you have to do. And I really appreciate it. It allows us to talk about the possible options that are out there. I mean, to me, these are questions that are reflecting the strength and the power of a multi property company in this great belt that we're in. So it's good stuff.
Yeah. I'm about to almost let you go here, gentlemen. What do you not like talking about? What's the most fair criticism? Like if you weren't CEO of this company, Rick, and you look at it, what's the most fair criticism you'd give it?
No, it's just the stock price. It's brutal. I mean, it's very difficult to defend, and it's very difficult to justify, and it's very difficult to do a damn thing about it. You see, if we, to our shareholders out there or possible investors, let's say I say, all right, we're going to take 50 grand into this marketing program. I want to tell you this. We have done this once in my history where we took one of these. It's a $125,000 commitment. We used it to drive the stock, and I don't think it was Harvest. I think it was another company. Stock was at 5 cents, but we had warrants at 9 cents, Antonio. So we wrote a letter to the warrant holders that they had a month left or something like that. And we poured this money into this marketing program, and the stock traded up to 10, 11 cents. We exercised all of those 9-cent warrants, and we raised $1.5 million. And when I looked at the commission, I think it was 1.2. When I looked at the commission, if you like, the fee and the marketing fee for that, it was less than had we raised it traditionally and we didn't have warrants on the financing. So it was a way to utilize existing warrants, make the shareholders happy because there are shareholders, and use marketing as a financing tool. I was told when I started in this business 25 years ago, there's only two reasons you want your stock to go higher: to finance or to sell. Now, that's the crass operating. What shareholders don't want to see is when the stock goes higher, the insiders sell huge positions and then announce a financing and reload at a lower price with a warrant. And we won't do that. I promise you, we will not do that. And that was typical in the old days of the Wild West. And Vancouver is less and less and less like the Wild West. Still some players out there. So really every day it's the stock price. I like where we are as a group. It's a challenge sometimes connecting these guys that are so busy. Louis, I rest a lot on Louis. I try not to bug him too much, but it's Louis and I that are kind of holding the story together. As I mentioned, Susie and Exploragique are fantastic. So we can move the ship along and guide it quite effectively with that small team. And then you get these other geologists in, which really focuses the direction of the ship. And that's what's coming out in this next evolution of the halo targets. And again, I compliment Louis on a lot of that work and the good review of historic data that has been sitting there for 45 years and no one's looked at it this way. To me, that's just an incredible story, Antonio. It's been sitting there, ignored for 25 years. And it took a different set of glasses to see a different way to look at the same property. That to me is very exciting, and I'm pumped about this. And so, we got to. And so now my anxiety is, we're not ready yet. I'm telling you the story, but we're not ready seriously to go to the money until, as I say, we get all of the news releases out and we get everybody on the team together on pointing the drill, so that I can then go to money with great confidence that says our whole team has looked at this. Louis developed the first draft. here's what it's come out, and this is what we need, and this is why we think this is a good idea to invest in this. So until I get there, which is probably a month away, it's just sort of ballparking for now. But that's the plan. That's not very far away, and that means drilling this year, which I'm really excited about. So it's good for our shareholders. All of it is exciting. And then I think really what's going to happen is we're more on the map. Again, we'll see what happens in these other relationships once we get 100% of the property. And then all of the things that you're imagining, Antonio, are possible. But I think best to wait until we get that 100% before we start having those conversations. It's great to be thinking this way again. You can tell it's exciting, and we're forward thinking, and we think we've got a kind of a really neat evolved story to tell here. And to me, this is cool. I'm pumped about it. This Halo story is terrific, and not bad to have silver and copper along the way at their prices right now. So we'll take it.
Is it the stock price keeping you up at night? Is it something else keeping you up at night? What's kind of the biggest challenge or risk or concern for you right now as a company?
2 weeks ago, I really had a couple of nights where I didn't sleep very well. It's typically the stock price. But the worst not sleeping is when I'm worried about, do we have the money to run the company? I'm confident that we run the company in a way the shareholders are happy about. Now our job to take, as we get this information in, to be very smart about what we do with it and how we move next. And the reason I'm doing both these interviews this week with Louis is to let people know we're very smart, we know what we're doing, and we know what we're going to do next. And Louis has described how we got there, and I'm describing how we're going to take advantage of this over the next month or so with the full team. Finally, we're going to come out with a new plan, a new statement that involves these other goals, including gaining 100% of Maso. And again, if I look at my first thing I said, thinking this morning about with the pictures, it's all black, let's say, and then the only thing left black are the discrete areas. There's something like that. We've taken our 69 and we've reduced them to this, and just making the point that this is exploration evolution. This is success. This is the kind of discovery that's required to allow us to be more focused and confident in our next drill program. As Louis said, we had 70 samples or 69 samples or 60, and now we're into 3 discrete zones. I think about that just from the point of view of, I don't know how many targets and oblongs we had, Louis, 6-8 months ago when we started looking at this. And obviously your job is to make your drilling more focused. And I think that's what we accomplished. I've said it.
We're still trying to tackle it from 2 different ends. I mean, one, we do want to get some good assays, encourage the market kind of thing. And so this is drilling along strike from known mineralized shear zones. And at the same time, we are going after the big elephant country kind of thing. Places where there's been no mineralization, no previous work, but it might have a good geophysical or soil anomaly kind of thing.
Yeah. Well, Louis, I wanted to ask you that same question. What keeps you up at night from a geological perspective?
Again, working with juniors, it's always, well, geez, I'd always like a bigger budget. And again, the problem is we've got too many targets, the primary, the secondary targets. And, again, confirmed confirmed mineralized zones versus elephant country kind of thing. So it's trying to smaller budget, multiple targets.
Yeah.
It's just getting the right proportion on both of them.
Yeah. Yeah, that's fair. When do you think is the next time going to be, gentlemen, that you and I are going to be talking? When do you think you're going to have something worth communicating again?
Well, it might be, let's you and I stay in touch, Antonio. It might be when we're ready with this detailed drill program as a product of this, when we're going to talk about raising money. Because if, in fact, we've got a dialogue going, and I think we do with some of your viewers, I think some of them have invested in the company in the last private placement and their network, then I think it's good that they can see it, and I can speak to that broader audience. And then we'll be obviously speaking specifically, and it's a good place to test things, Antonio. I've always said that if I'm preparing to percent of financing, I want to go to a friendly audience first. It's kind of like, you in theater terms, you don't hit New York until you've been to Boston, and you test it out in Boston or whatever the smaller city is, and you sure as heck don't want to get to New York where it's got to hit without having taken the flaws out of it. And these stories are iterative. People have good ideas. People's experience say, oh, don't say that, or you're missing this really neat thing that I discovered in my life back here. Why don't we add that flavor? And that's part of this, as I call it, the storytelling when you're preparing for a financing. And fundamental to it, of course, is excellent geological rationale. And I think we're always comfortable that we have that. And we need to keep sharing that in that way, because ultimately it's the technical analyst for the fund that will tell the tale to the fund, the technical analyst. And that's where sometimes we get the very best feedback, because those people have seen everything and they've also heard everything as it relates to money for value. So that feedback is often really real. And we have these fund managers in Quebec are just great guys. They're so experienced in Quebec. They're really, really terrific when I talk to them. And since they're shareholders, again, they want us to succeed. So their kind of feedback, and Louis knows these guys. I mean, they're just good guys, and they want Quebec companies to succeed, Antonio. So we have those people in our feedback loop too. It's a great team behind us as we get this geological story ready.
Mm-hmm. Well, you said when it's time to raise capital and seasonally connected, are we thinking this summer? Or when do you think that's going to be?
Well, again, I think in a perfect world, we're ready in a month or 6 weeks, let's say. We'll test the story out. We'll find a price point. We'll determine the structure. We'll have decided by then how much money. This charity flow through, I had lunch in Vancouver with the guy that runs the charity flow through company that we use. Terrific guy, a geologist, another geologist. So Louis, I didn't mention that Gary's a geo. He wants to kind of sit down with us and take a look at things, which is awesome. He told me this story about a company he worked with in Nevada, and he saw an anomaly, and that anomaly became a deposit, and he remembers it still. So again, you get these fresh eyes on a story, and these worldwide experiences these geologists have, Antonio, it's quite remarkable. It really is quite remarkable how they can draw from that and add value. So the amazing thing for your European investors, and some of them may have ended up being front end investors on what's called the charity flow through, but it's a government program that provides a tax advantage to charity and effectively gives us 20% more to spend on the ground. So we raised $2 million in charity flow through roughly, and we ended up with $2.4 million real dollars to spend on the ground. So it's a non-dilutive, if you like, form, less dilutive form of raising money, and it's really good for all of our shareholders. So it takes usually bigger chunks to make it manageable for the charity flow through organization, but they're waiting and ready to help us on the next one. So all of that's constructed in the last 6 or 8 months with the various funds, other than Crescat, who's known us for 4 years now. And it's our job to keep them on side and keep them engaged and get them to step up and invest again. And I'm looking forward to that because I think the story is growing nicely.
Good. Well, again, it's been a good overview. What am I forgetting to ask you here, though, gentlemen? What did you come here hoping to talk about that I've failed to bring up, or what is kind of the final takeaway you want to leave me with?
Louis, anything?
No, I'd say it's a progressing geological story. It's going positive at this point. We keep on learning, and from that stuff, we're going to apply to the new areas. Yeah. So, I mean, it's not over yet at this point.
And I'll say that the upside of this crazy gold price, wherever it is that cutoff grades are going lower. And, people are relooking old deposits. Hey, Louis, I mean, people are just going, oh, boy. So that's going to help us ultimately as well, I think, in a value proposition. Just a general statement. And again, we're in a neighborhood, we're in a belt in the Abitibi, and we're in a neighborhood in Quebec where everybody, and the government is driven too, they want to see mines built. They understand the economic driver. I think Canada broadly, at least the federal government talks about it, but I think within the population, it's becoming more and more clear that we need resource development in Canada. Quebec, absolutely. They commit, especially in northern Quebec. Antonio, northern Quebec is rural. So what happens? It's resource development. And so their whole communities and infrastructure are designed to do that. And so I'll just say again, we are in a really terrific place for that, and we're in mine-finding country. So I just want to. My last thing is to say, this address, and now with a gold price that's where it is, a copper price that's where it is, a silver price where it is, the value of this address is rising. Doesn't show in our stock price yet, but it will.
Mm-hmm. That's a good takeaway. As I mentioned, my biggest takeaway is that we're going to call Louis Leo because he's Louis the Geo, hence Leo. So, Rick, for you, maybe we'll call you Rio because you're Rick and CEO, and then you have Rio and Leo.
Yeah, I like that actually, Rio. There's very good Japanese golfer, this young kid named Rio I watched yesterday. He was good.
The more you know. Gentlemen, this has been a pleasure. Thank you so much for your time.
Thanks again, Antonio.
Thanks, Antonio.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Oh, so unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find a company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."